Hi everyone, welcome back to my channel. My name is Phi and this is Money Philosophy. Thank you for coming back for another day of Tesla analysis. Today I just finished listening to Tesla's earnings call and there is a lot to unpack today. I will also walk you through my technical analysis for Tesla. If you stay until the end of the video, I have some trading tips and I hope that it is helpful to all of the traders out there. For investors, today is a good day for all of us and I think Tesla is on its way to the next big thing. Stay tuned until the end of the video so you don't miss any of the good stuff, and with that in mind, let's jump right into it. But first, if you're new to my channel, please consider subscribing. I am a Tesla investor, a growth stock investor, and I would love to share with you my trading and investing journey. Thank you very much, and let's dive right in. So let's take a look at the financial highlights for Tesla. Tesla had another outstanding quarter with roughly $600 million in GAAP operating income, representing about 5.7% of operating margin in Q1, over $400 million in GAAP net income, and a $1.1 billion in non-GAAP net income. Non-GAAP net income is basically excluding stock-based compensation. Model 3 was the best-selling premium sedan in the world. Production ramp of Model Y in Shanghai was progressing very well, and record production and vehicle delivery for Q1 of 2021. So over here we can see that while the average selling price of Tesla vehicles declined in Q1, Tesla auto gross margin increased sequentially as their cost decreased even faster. So what we can see here is that the Fremont factory is by far the oldest factory and arguably the least efficient of all the factories that Tesla have. From here on out, Shanghai, Berlin, and Austin will gradually perform better in terms of line layout, efficiency, and productivity from here on out. However, that alone is already contributing significantly to the margin today. So you can only imagine if Tesla is going to fully build out Giga Berlin and Giga Austin and fully ramp up of Shanghai, you can only see Tesla taking off from here from a margin standpoint. Looking at the numbers here, Tesla generated over $9 billion in automotive revenue, of which over $500 million is regulatory credit, with a profit margin of 26.5% for auto only. And let's look at the year-over-year increase. This means that comparing Q1 2021 with Q1 2020, revenue increased up to 75%, regulatory credit increased 46%, gross profit increased 82%, and gross profit margin increased by 95 basis points. This is very impressive for a company that is already high growth, an AI company at its core, and so there's a lot in store for Tesla in the coming year. We can also see that capital expenditure increased by almost 200%. This is the result of expansion as a good, healthy growth company would have. And I expect this number to continuously increase year over year due to the various expansion projects that Tesla have. The quarter-end cash and cash equivalent decreased to $17.1 billion, primarily driven by net cash outflow of $1.2 billion in cryptocurrency, i.e. Bitcoin purchases. When Tesla purchased Bitcoin, it was around $33,000 per Bitcoin. Today, it is roughly $50,000. So Tesla is sitting on almost $2 billion of crypto, even though Tesla already sold 10% of that and recognized some gain for 2021 Q1. So this is interesting because as crypto goes up in price and Tesla does not recognize the gain, i.e. it does not sell, Tesla does not recognize any income. But in quarters that Tesla want to boost its income, it could easily sell some Bitcoin in order to recognize some additional profits. So keep that in mind. This is going to be the secret weapons. So Tesla has close to about $2 billion in secret weapons, which is a good buffer for the financials in quarters that it needs to use that additional income. As far as the various factories here in China, Model Y ramp in Shanghai is progressing well. We expect that our Shanghai factory will continue to increase quarterly production output throughout the year. We recently improved our domestic supply sourcing ratio over 90%. So Tesla source out of the China market over 90%, minimizing the cost of importation. Vehicles exports to Europe and APAC, Asia Pacific, continue to progress as planned. In Europe, Berlin-Brandenburg, the build-out of the Gigafactory Berlin is continuing to move forward, with production and deliveries to remain on track for late 2021. Machinery for paint, stamping, casting continues to be moving into the building. In the meantime, Tesla will continue to increase import volumes into Europe. So we can see here, Tesla has not disclosed the capacity for Berlin or Texas yet, and it leaves all the other maximum capacity at 1,050,000 vehicles right now. But I think in 2021, in the back half of the year, we will start seeing vehicles rolling off of the lines in Berlin and Texas. Autopilot and full self-driving, and particularly full self-driving, is probably the most important for Tesla's scale in the future. Some of the information is really interesting to note on the earnings call today is that Tesla believes that as the world transitions to EV, there will be a shortage of power, and the utility companies will not scale up fast enough to meet the demand. And therefore, Tesla Powerwall and Powerpack will play a pivotal role in the process of providing and supplying power to the market. The demand will be 3 times higher, and all of the utilities company won't have sufficient capacity. Instead, they will have to leverage Tesla Powerpack. Local residents will have to leverage Tesla Powerwall in order to have sufficient supply for its energy consumption. So that is a very interesting point, because the energy side of the business will take off, but it will take off at the scale that will be surprising to the world. So on the one hand, Tesla and its vehicle and full self-driving will be a big revenue generator for the company. On the other hand, the energy supply side of the business will have to ramp up and keep up with the demand for vehicles, because now you cannot just as easily charge this from home using the utility grids, because if everybody in your neighborhood is charging that, we're not sure if your utility company will have sufficient power to supply to you. The process of building a substation is painful. It costs real property, it costs machinery and equipment, infrastructure, construction, to name a few. Whereas if you just buy these Powerpack and Powerwall and properly house and operate them, there could be a great opportunity to supply to the entire neighborhood, to the entire community, with very little pain and investment. So utility companies will pick up on that and will partner with Tesla to provide to all of us sufficient energy. So let's talk about technical here. For Tesla stock today, it had a indecision candle. It gapped up, but it hovered in the same area all day long. As I mentioned, I think traders and retail investors as well as institutional investors are waiting for earnings. So there wasn't a whole lot of movement there. Taking a look at the 30-minute chart here. Tesla hover around, like I said, below the pivot line here. And for tomorrow, we're looking at the range of 757 to about 729. Once again, this range is based on price actions for the past 2 days. It does not take into account earnings. So with earnings, the range might be sufficiently larger. So as far as trading, there are a couple of scenarios here. You can trade the gap, or you can trade the support of $697. I think that when Tesla opens in the morning, depending on the pre-market price action, but very likely that it will have a opening gap. Depending on a gap up or a gap down, you could play that gap and bet that it will narrow the gap. So for example, if Tesla opens up, let's say at $710, and it ended the day today at $738. So at $710, that is a $28 gap, and you could play a call option for it to semi-close the gap at around $725 or $730. I would first wait for a premium to deflate, which usually should be deflated within the first 30 seconds of market open, and no more than 2 minutes. And so at that point, you should jump into your trade for the gap play. If the gap is big, over $20 like that, I would not count on the gap to be closed completely. I will only play directionally in the direction that it will close the gap, but I will not wait until the stock completely closed the gap to take off my trade. And that trade can span over a few minutes or a few hours, depending on the volatility. Now, if Tesla does not have any gap and opens around $738, but managed to stay above $740 with volume, I would probably enter a call because it would probably likely to hit $756 tomorrow. Conversely, if it opens without the gap and tend to stay below 740, it could probably go down to 730. However, the distance here is only $10, and if it doesn't have volatility, there might not be a whole lot of money to be made here. So I would be very careful on the downside. Now, if it loses $730 and stay below $730, then chances are it could potentially hit yesterday's lower pivot, which is 705, and the next one would be 697. So this is it for this video. I hope you find the information helpful. For investors, congratulations. It has been an outstanding quarter for Tesla and many, many more to come in the future. For traders, let's make sure that you lay out all of your scenarios before enter a trade and exit a trade. Have all of your price targets ready. I'll come back for more technical analysis in the next video. And until then, bye.